This is our Forex blog for June 23rd, 2003, and just incredible strength all day in the dollar, and the yen also had consistent strength. Without a doubt, the euro was the weakest of all, and another super strong one was the Swiss. So basically, you could have been selling the weakest euro against a strong Swiss, dollar, or yen all night, and just had a killer night. If you bring up the euro dollar chart, first of all, as many of you know, I scaled into a nice short at 44.21 here. That was the beginning of the downtrend. Very light, high probability counter trend signals there, and that started the downtrend. And anytime you have a big drop like this and there's almost no pullback and it just kind of goes sideways, here's some of the highest probability trades to the short side today. Right here, it came down here, kind of ran out of steam. You'd be out with a small profit. Came back up, double topped right at this level, couldn't break it. And at that point, it becomes pretty high probability, to move a decent number of pips. And you can see it fell right to my next fib area. If you get out somewhere a few pips off the low here at 68, you made 30 something pips on there. And then also, there's only two entries that we find the strongest trends, and we get into those trends usually on two methods. One of them is a sideways rectangle pattern. The other one is a pullback. This is kind of a little of both. It's a sideways rectangle pattern with a slightly upslope to it. Very high probability short right here with your stop right above the high, and your next profit target's right down here at these fib areas. So I would have probably taken that trade and got out somewhere right here. And then again, it went sideways again. At this point, I expected to maybe go down to 4,200 or 4,185 and get a bounce. So because of that, I didn't consider selling here. I was also working on a new tool this morning and missed an even better trade in the pound dollar. But I did scale into this trade and got out, with a few pips as it made a nice little bounce here. Even better trade than that would have been the third fib target. When it's this far underneath the lower containment bands and you get a bunch of counter trend signals and you have a nice little double bottom right here, it's a very high probability trade. Usually this goes for 20 or 30 pips. This one had so many waves down today, kind of 1, 2, 3. I wouldn't call this another wave down, but 3.5 waves down at a fib level with a ton of counter trend signals. But earlier today, this trade right here for a small profit, this one, and if you don't mind taking a relatively risky trade, because when currencies are underneath the lower band, most of the time they reverse and come back up to the hourly. So selling underneath of the lower band is a relatively risky thing to do. It oftentimes pays off. It might only work 50% of the time or less, but when it pays off, sometimes those 30, 50 pip moves, make up for all the losses you'll take by taking that less than high probability trade. But again, the euro was weak, the yen was also strong. Looking at this one didn't fall as fast as the dollar. The yen wasn't as strong as the dollar was, but it also has a nice little sideways pattern right here. You might have gone short here, and it came down, and you might have even gotten break even onto that trade. And then it goes sideways here for a couple hours, breaks down again, and you have a nice trade. Notice how this one is not underneath the lower 1.1 band. So, more than likely, because of the extreme weakness, when it goes sideways here, you just put your stop above here. And most of the time, you're going to get out of these trades at fib targets. This was kind of the beginning of today's move. This was the low. Usually, the first or second fib target's the maximum profit you're going to make on that trade. So you were short somewhere around 87. And I would have probably myself got out here at this Fibonacci area. The yen wasn't nearly as strong as the dollar, so that would have been 31. The short was up here around 80 for about 50 pips. And again, when the currencies are right near the lower band, it's a little bit more than a 50-50 trade if it's a super weak currency like this one. So if you wanted to short this right here, don't be greedy. Just draw your fibs off the last little tiny wave and get out of that trade at the first or second fib target. You wouldn't have made more than 25 to 07, maybe 15 pips on that trade. And you might have shorted that little pullback here and rode that down another 25. But the yen wasn't nearly as weak as the dollar. Now the Swiss, in some points today, was actually stronger than even the dollar. So selling the weakest euro against the Swiss also paid off handsomely today. And you can see in this case, It also went sideways right here. Came up to the hourly. This is a very high probability trade. And this is a tough one because it's going sideways but kind of slightly drifting down. I do not personally like to take that pattern, but usually it pays off. You know, the Swiss was just so strong last night. So when it found support at the previous day's low and came down here and acted, you know, went sideways here for 15 minutes, there was clearly buyer's error. It would have penetrated it the second time. So once it broke here, it's a very high probability trade, and it was one of the weakest ones at that point. This is just one of those currencies that's so weak, looking at the weekly and monthly trend down there, that your best bet is just to use our trailing stop, or every time it makes a lower low and goes sideways, just continue to move your stop down. Now this double bottom right here is a likely low, so you tighten your stop there, and it never penetrated it. Usually they don't go past the 1.618 fib target of this move. So when it came down here, right around here, this was likely the maximum profit target you're going to get. If I was still on that trade, that's where I would have exited, right at 1,900. Now it went another 50 pips down. It's very risky selling it down here, this far underneath the lower containment band. But the Swiss was probably consistently the strongest pair today. If you don't want to use fibs to get out of the trade, you can just use our new FX Intella stop. This uses the same technology to know if it's super weak, it has a wide stop, so you're not likely to get stopped out. You're likely to stay in the trade all the way down. Let's see how this one did today in the Euro Swiss. Alright, so this one actually had you started looking for shorts right here, out, short again here, out with a small profit. Well, it's not a small profit actually, 93 to 70, yeah, 23 pips, not too bad. Short here, out with a small loss, it looks like. Short again here, and it looks like it got stopped out here. So, if you're in one of these trades where you expect it to go a good distance, 50, 100 pips or more, instead of using a 5-minute data stream, you might use a 15-minute, and that way it will have a wider stop. And more than likely, it will stay in this trade the whole way down. Actually, it did get stopped out once. Was short here, out here, short again here, and it just got out just a few minutes ago at 74. Pretty much catching everything except for the bottom 25 pips. It's a decent way on longer term charts to keep you into those trades longer. Now, one of the trades that I'm personally mad I didn't take today, very high probability trade, was this pattern right here coming up to 8. The pound also was weak today, and the dollar is one of the strongest ones. This one, had a double bottom here, but didn't get any kind of a bounce and didn't go over this previous swing high. And when it went sideways here for about 45 minutes, it's a pretty high probability trade. Very low volatility, had a lot of weakness, and then it disappeared. And as it's going sideways right here, there's almost no strength. This trend's down. The dollar is one of the strongest two pairs. Very high probability trade. And most of the time underneath the lower containment band, it's going to come up. So you want to watch that like a hawk. Maybe get out of the trade here at 70. But that would have been a 15 pip, very low risk, high probability trade. And again right here, extreme weakness, kind of drifts its way up here with a kind of a wedge pattern, not a perfect wedge pattern. A perfect wedge pattern is where it makes a high, then it goes down, 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 and breaks down. But these kind of patterns are rare. More of a pennant type pattern. You short it right here around 59.75, and again it's underneath the lower containment band, and it's falling initially with some weakness. The weakness falls off, so as soon as it basically goes above the previous 5-minute bars high, you want to get out somewhere around 50 here, and that's good for about 25 pips. And you also want to know where your fib targets of the previous move is. This was a pretty decent sized move, and like I've always said in class, usually when the currencies are underneath the lower containment band, the first or second fib target is the end of the move. So it went through that, ran out of weakness, decent place to get out of the trade, and it actually turned out to be a decent counter trend trade too. You can use our tick charts to also more perfectly time the entries here. For example, where was that trade coming up to 8 o'clock right here? You can see that we had a narrow range pattern. This was the least volatility over the previous 30-minute periods, and when it breaks down you want to go short. And in fact, seeing that it was a low volatility pattern, if it breaks down right here, it's very likely to go below the low, which is right here, which is only a few pips away. But if you're going to trade decent size, 5-10 lots or more, 88 88 is a better entry than 83. That's 5 extra pips. With 5 lots, that's $250 extra in your pocket, and also has a tighter stop right here versus, another 3 pip stop. And so when it goes underneath the lower containment band, notice our tick scalping method stays red and it goes green right here. This is a decent place to move your stop down, so you lock in some profit. Comes down again, very, very light green. And whenever it's underneath the lower band, you're expecting kind of a reversal. So it comes down and goes green, even darker green right here. You might want to put your stop right above that 50 tick bar right here, and you're out of that trade somewhere around 60. Short at 87 for a good 27 pips. And usually when they're underneath these lower bands, you get some kind of a bounce. So I'm usually pretty hesitant to get short again on the first move up. Came up, there's some selling there, buying here, selling here, buying here. Just barely made a higher high. Didn't explode up much at all, and also went sideways. So this is a pretty high probability trade. Usually the double bottom is a good profit target level, and so you're shorting this at 75 with your stop right above the high here. What is that, 82? You literally got a 10 pip stop here, and so you really need to make 10 or 15 pips most of the time in order to ease up on some of the losses that you'll have. Losses are part of the game. Here's your profit target down here at 56. So it has a bigger potential win than a loss. And so if you got out of that trade right here, you made 1.5 to 1.6 times your risk, and it was a pretty high probability trade. Fib targets on the way back up also are pretty good. This thing kind of went up. I don't like the first wave. Comes up again and kind of goes sideways. I prefer to draw fib targets on bigger moves. This one went right to the 1.618. I wouldn't necessarily sell it here because you don't know if that moves over. But when it kind of goes sideways here and breaks down, you can go short right underneath the low here. And again, your first profit target is the previous swing low right here. Second one is right here. So at these levels, you might have exited your trade here, but you made about 10 pips while risking, in this case, about 7. So that meets the risk-reward parameters. I'm going to do a regular class now.